This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, let's take a look at the gold market. Well guys, on the previous week we have not dedicated a lot of time to the gold market as to the euro currency, because there were a lot of different more interesting setups on the different currency pairs, particularly speaking on the Japanese yen, on the Great British pound, on the New Zealand dollar that we mostly have discussed on the previous week. But still, the gold market is our major, one of our primary objects, and we have to dedicate the time to this asset, because sometimes it shows the periods of silence, but usually during this period the market is building energy and is preparing something significant, and that could lead and could finally lead to appearing of some fast action. So recall this price standing in this range. So we said, especially during the last week, so that was really anemic actions during the whole week, and we said that market probably building an energy and we will get some fast release of this energy, and that really has happened. We said that this probably should be to the downside, and that has happened, because in general currently situation on the gold market stands bearish. If you will read our recent weekly research, and particularly fundamental part, you could find the comments of the different analysis from the large banks who suggest that right now market just has no power to show any bounce to the upside, because no significant factors, driving factors that could push market to the upside, these factors right now has no sufficient power, as inflation, as the spot demand, as the seasonal trend now are weak, and that is confirmed, also is confirmed by the assets of greatest spider fund. Their assets has drawn significantly, and right now they stand just 2 tons higher than the absolute minimum, somewhere around 780, 790 tons. It's really very low, and we do not see any stable positive dynamic in the assets of this world largest gold fund. That just confirms that the spot demand and the general demand in the gold market now is weak, and market in general stands in the bearish sentiment and the bearish trend. Well, we have some extended targets to the downside, and we have discussed this even on the previous week. So if you want to know about it, you could read the weekly and monthly analysis. But what to expect in the nearest future? Unfortunately, the previous week was really calm and market hasn't shown any significant action, but still there are two moments that I would like to discuss on the gold market today, and what we will watching for the next week. Actually guys, we just can't drop out the gold from our eye vision, because this is really a very significant market for us, and we, despite how active or lazy market is, we can't just ignore it, and we have to dedicate time to this market. So what do we have on the daily picture? I have drawn a lot of colored lines, but so let's go through them step by step. First line stands right here, it's 618 extension of that ABCD pattern, and that is not only the 618 extension. So if you draw the fib levels from that low to this high, you'll see that this was also the 618 major support. And take a look what has happened. Market has passed through it as it now exists. That was really significant support there. That was an agreement. Market has passed through it. Now we see some bounce up. Take a look that this area in general stands very close to the monthly pivot point. It's 1269 area. and this level hasn't been tested yet. That's why I suspect that the first destination of the retracement will stand around 1270, because any market has the tendency to retest or revisit the broken significant levels that has been broken previously, and if they were broken without any respect. So for example, if on the weekly chart market has passed through the confidence support without no respect, in this case there is significant chances appear that market will return right back up and will retest these levels from the opposite side. And here we could see it here in the nearest future. So market could return right back up and retest this broken level. This is very probable. Also, guys, take a look that this is former low stance when the market in fact stands for a long period, and that was the lowest point of this consolidation. Gold has the habit to retest the broken extreme points. So when market breaks through some area, it very often returns right back up and retests this level. And you take a look that this level stands right at the monthly pivot point. So that's the first object that we will monitor in the coming week. That is the 1270, is the possible object of the retracement to the upside. Here, guys, you also could see some other points that confirms this level. So the support, resistance again, broken up, support. So you can see that's long-term natural support resistance area as well, 1270. The next level stands right here, so is 1618 extension of this butterfly pattern that hasn't been reached yet for some sense, and 1236 area, slightly lower than here. That is the weekly 618 extension target of the big weekly ABCD pattern. And we, in general, guys, we have discussed this moment on the previous week, that I said that every time I feel uncomfortable and wouldn't bet on any bounce until market will not reach the target that stands slightly below it. And here we have the particular of this situation. So market turns to the upside without hitting the major targets, 1236, the major ABCD extension on the weekly chart. Market has turned to the upside but hasn't quite reached. This is very risky and significantly increases the chances that market will return right back down, hit this target first, and only after that will show any significant retracement. It's very dangerous to take the long position having the untouched target below the market. That's really just significant risk. Finally, these two levels is the next destination of the possible downward action if market will follow to it after some retracement. That's the combination of the monthly pivot support 1 and take a look. 100% extension ABC top D target of this ABCD pattern 1215 area approximately. So that will be the next destination. Now let's take a look at the 4-hour time frame chart to understand how particular market could show this bounce up. So here we have the butterfly. Also, guys, you could see how market just hovers above this target. So you can see that market still hasn't quite reached it and showed this splash up. So here, guys, I see two possible scenarios of the action in the beginning of the week. The first scenario is market will return right back down, showing the wash and rinse of these lows, will grab the stops above these lows, will form something that will look like double bottom, and only after that will show the retracement right to the monthly pivot point, maybe slightly higher. If this will be the double bottom, so that will be approximately 1272, 1273 area, probably. That's the first scenario. The second scenario, market could just show ABCD action to the upside, right to the fib resistance and right to the monthly pivot point. But knowing, guys, the cunning and the habits of the gold market, I would better bet on the possible wash and rinse of these lows and forming something like double bottom, because that will be the trap. The bounce up is the trap for those who see this nice candle to the upside, taking the long position, but do not know that market hasn't quite reached the weekly target that stands $2 lower than the target of the butterfly. and that works as the magnet for the gold market. They will be trapped when the market just will return right back down, grabbing the stops below these lows, hit this target 1236, and return right back up and start to form double bottom and turn to some, maybe it will turn to some retracement to the upside. That's absolutely in a row with the habits of the gold market. That's very typical for the gold market. I do not want to say that I definitely will trade it on the long side of the market, because currently the trend is bearish and the sentiment is bearish on the gold market, and our major objective is to wait for the bounce that should give us the chance to take the short position. That's our primary target. Whether to trade some scalp bullish patterns, that stands upon you. So if you feel the confidence that you could do this, and if you trade these patterns and you have the experience to trading them, especially on the gold market, if you're a trader on the 15-minute chart, on the 30-minute chart, well, you could try. Maybe it will give you some dividends. But in general, our major object is wait for the bounce and use this bounce, if it will be gradual and if it will suitable, use this bounce for possible taking the short position, because the potentially market could reach as far as 1140 area before end of summer. So that's really a huge potential in the gold market, especially with the such clear patterns that we have on the monthly chart. This potential double bottom, this possible retracement to the 1270 is just a minor episode, minor moment in the overall big picture. So that's in fact all that I would like to say about the gold market currently. So the major point of this update is be careful with taking any long position before market will take the 1236 area.